for repair maintenance as that this be used as a source for repair and maintenance as opposed to programming. And so if we can do those additions and move items 5, 7, 9, and 10, and then we could ask the city attorney to come up on item 6 and give us the verbal direction or recommendations.
Yes, we'd just like to request the approval to transfer $416,000 from the LHD rent SCEP account to the LHD outside legal counsel account. That's the request.
Now, this is for the paying the attorneys. This has nothing to do with whether there is a settlement of any type or any judgment. This is just paying the attorneys for the work they've done.
Fees, yes.
Okay, thank you. Any questions, colleague? We'll accept that recommendation from the city attorney and then move item number 9. I'm sorry, item 6. I'm sorry, item 6. Okay, then we go to item 8.
Item number 8 is Department of General Services report relative to an update on the city's photocopier hard drive security policy and request for the data override security system software feature.
Good afternoon. Gerald St. Ange, Department of General Services. Several months ago, it was brought to our attention that all digital copiers utilize hard drives that store data that can be compromised.
Sir, can you speak up? Speak into the mic.
Okay, so several months ago, it was brought to our attention that all digital copiers utilize hard drives that store data that can be compromised. Concerned for the safety of the city's data, we spoke with our copier vendor, Ricoh, which developed a security software called DOS, D-O-S-S, which stands for Data Override Security System. Once installed, the data will be overridden and destroyed. At the request of the Public Safety Committee, a hard drive security policy was developed to assist departments in making a decision on whether to have this software installed on their machines. Per the City Council recommendation, we surveyed all departments to determine exactly how many installations would be required. We sent out 40 surveys, of which 17 were returned, representing about 636 copiers out of the 1,500 that are leased by the city. Of this amount, 517 copiers were determined to require the DOS installations. To date, we have processed 320 orders for the installations, of which 300 have been installed. The cost of the software is approximately $275 per machine. This could be paid by a one-time PO or a $10 a month lease increase for the machine as well can be done. All of the departments are utilizing current funding to process their purchase orders for to have the DOSS installations. We've also been told that some of the more critical ones are being done now, and they've budgeted for the remaining of the machines for next year's, using next year's budget as well. So we're just going to continue to monitor the installations and continue to work with the departments so all the installations are completed.
Let me just make sure. The chart that shows the departments, the ones that do not have material or information, is that, if we assume the ones that didn't answer?
That's correct.
Okay. So the ones on the top part of the sheet are the ones that answered your survey.
Correct.
One thing I was going to ask, because of this need, is there any consideration to making this a part of the standard contracts in the future?
Yes, it is. We have spoken with the vendor, and as a matter of fact, the industry as a whole, regardless of who will get the next contract, it is all being built into their machines, so this would not happen again.
So we wouldn't have to go back retrofit in the future?
That's correct. It would be part of the equipment once we obtain it.
Are we aware of any breaches of security while we've been under this current system?
No, we have not been made aware of any breaches.
And then what are we going to do about those departments that didn't respond?
We have contacted them individually. Since the survey was completed, 5 additional departments have stepped up and ordered approximately 100 more installations to be performed, and we're continuing to touch base with some of those departments and making sure that they are aware that this is out there, and if they do require the installation, we will help them in processing the paperwork to get it completed.
So that's what, 22 of the 40 departments?
Correct.
Okay. Uh,
Yeah, thank you. And this was something I actually brought forward because I heard of a report on, I think it was on PBS or something. So there have been critical breaches, just not in the city of LA that we know of, but I think it was city of Buffalo that had 100,000 social security numbers get out into the public, and all the drug files of the police department got out. So this is a critical problem. As I look at this list, there's some really critical departments, the police department being one of them that's on there.
Right. We have spoken to the police department, and they are one of the ones that are trying to budget it. Their most critical machines this year, and they've budgeted for the rest of their machines for the next fiscal year.
Yes, so the go-forward solution, I know, is fixed. I was just concerned about the existing machines that would be going out of service soon. So police department has responded, just is not on the chart.
Correct.
Who else has responded that's not on the chart?
Let's see. Here we go. Fire department, ITA, Lacers, and the personnel
Fire
department.
that includes all the fire department, or, I mean, the critical one is the ambulance services, obviously.
Yes, I have, they've ordered, they're going to order approximately 56 installations, so that would cover their
Good,
machines.
all right, because that's a critical one. That could get us into a federal law problem if we release that information, so, all right, very good, thank you.
And of those departments that are, for instance, some that have closed that are returning machines,
Yeah.
we're just, RICO is extracting the hard drive and leaving the hard drives with the departments. So there is no machines going back to the vendor that have hard drive information.
What was the fifth department? I got police, fire, Lacers, and ITA.
Personnel.
Yes.
Okay. Let me just ask, as a support, if we could ask the CAO to follow up on those remaining, 18 departments or so, that we can ensure that they are complying with the survey, and then we'll move this report. Thank you.
Okay, thank you.
Item number 11 is City Attorney Reports, Ordinance amending the Los Angeles Administrative Code in order to create a responsible banking reporting procedure in the City of Los Angeles. Jobs and Business Development Committee recommended approval of a draft ordinance on October 26, 2010.
Now, we're on what, 11?
Yes, this
Okay,
is
let me just, before we get, let me just verify, on number 8, we're approving the General Services Report and recommendations. Greg, did they have a Public Safety Committee report?
On which,
Number 8.
no, oh, yes, on 8, we did, yes.
Okay, so we would also support the Public Safety report.
Okay.
Okay, now we'll go to 11. Okay, thank you. I'm sorry, one other thing. Let me get all the public comments, and then you could hear the public, no, it's just, you could hear the public comment, and then if there are issues, you can reference those in your comment. First, public comment, Lynn Motley, Esperanza Casco, come up to the 3 mics, Ann Williams. Okay.
Good afternoon. My name is Lynn Motley, and I'm a member of ACE. In addition to looking at how the banks are servicing our community, we need to look at how the banks are servicing our city. We know that the city is losing millions of dollars each year in the toxic interest rates swaps. This law should also rate banks on how much they charge the city in interest. This policy can be a win-win by helping save the city money, as well as ensuring that the banks invest in our communities. Thank you.
Thank you.
Mi nombre es Esperanza Casco, soy miembro de ACE.
My name is Esperanza Casco. I'm a member of ACE.
Estoy acá porque quiero que los bancos sean más responsables.
I'm here because I would like the banks to be more responsible.
Les voy a contar una historia que es una prueba de cómo algunos bancos grandes están haciendo daño a nuestra comunidad.
I'm going to tell you a story that proves that some large banks are doing a great damage to our community.
Mi esposo y yo somos dueños de un pequeño mercado por más de 12 años.
My husband and I have owned a small market for over 12 years.
Por más de 17 años hemos vivido en nuestra casa en donde criamos a nuestros 3 hijos.
For over 17 years, we've lived in our home where we have raised our 3 children.
Hace 2 años nuestro banco Washington Mutual estaba siendo comprado por Chase.
2 years ago, our bank, Washington Mutual, was in the process of being acquired by Chase.
Durante este tiempo, aunque siempre hemos tenido un ingreso estable, nuestro banco nos ofreció un pago reducido.
During that time, even though we've always had a stable income, our bank contacted us and offered us a lower payment.
Aunque no lo necesitábamos, lo aceptamos porque no nos avisaron de las consecuencias.
Even though we didn't need it, we accepted it, the modification, because they didn't explain what the consequences would be.
Después nos pusieron en el programa de HAMP temporalmente y nos hicieron aplicar por una modificación permanente.
Then they put us into a trial HAMP modification, and they asked us to apply, they had us apply for a permanent modification.
Mientras seguíamos haciendo los diferentes pagos que nos pusieron y entregábamos todos los papeles que pidieron por la modificación, en agosto de este año.
Espérate un momento. During all of this time, we complied with all of their requests for paperwork in order to apply for the modification, and we made every single payment at the various payment levels they gave us.
En agosto de este año, el banco de Chase nos dijo que debíamos más de $50,000 y que nos iban a vender la casa.
In August of this year, Chase told us that we were $50,000 behind and that they were going to sell our house.
Hicimos lo posible por posponer la venta, pero el 12 de septiembre la casa fue vendida y ahora estamos en el proceso de desalojo.
We did everything we could to postpone the sale, but on September 12th, our home was sold, and we're now in the process of being evicted.
Nosotros nunca hemos faltado un pago en nuestra casa en 17 años, y sin embargo, el banco de Chase ya quiere sacarnos.
We've never missed a payment on our house in 17 years, and even still, Chase wants to take our house away from us.
Por eso estoy apoyando a la ley propuesta, porque creo que es importante que si la ciudad va a invertir millones de dólares en estos bancos, tienen que estar seguros de que no estén haciendo daños a nuestra comunidad.
That's why I'm supporting this proposal, because we think that even if the city is going to be investing millions of dollars into banks, that there should be a process to determine whether the banks are hurting our communities.
Y además creo que la ciudad puede ahorrar dinero al darse cuenta de quién está cobrando altos intereses.
And I also think that the city could be saving money by paying attention to what interest rates are being charged by the same banks.
Okay. Thank you.
Thank
Gracias.
So would you give your name?
Peter Coons, Kuhns.
Thank you. And then could we get those 2 seats so we can bring someone else up? Ann Williams, Nam Sean, Dennis Santiago.
Good afternoon. I'm Ann Williams with the Central City Association. We have significant concerns about this draft ordinance, and we, along with VICA and the Los Angeles Chamber of Commerce, have submitted a letter detailing those concerns, which you should have in front of you. First, we acknowledge and we understand that there is a lot of anger and frustration directed toward the banking industry right now. However, this ordinance will do nothing to address those problems. This ordinance is misguided, and it will only create a new bureaucracy that the city does not have the resources to develop and implement nor maintain. Instead, the city is going to be burdened with a new program that creates a mountain of paperwork with little to no real effect. We're wondering what are the costs and personnel requirements for collecting, analyzing, and organizing the substantial amount of requested information. At the same time, the ordinance is vague, unclear, and subjective, which undermines the stable, well-understood regulatory environment that's so critical for both the city and the banking industry when they conduct business with each other. All of these issues arise without achieving relief for Angelenos suffering in this great recession. We are working with representatives from the banking industry to open the lines of communication with City Hall, and we respectfully ask for some time to see how much progress we can make in that regard without creating a lasting, expensive program for the city. Thank you.
Thank you.
My name is Naeem Shaw Jr. I am the religious leader at Masjid Ibadallah and also a community organizer with LA Voice. Masjid Ibadallah is located in Los Angeles with many of our members in Councilman Park's district. Tonight, LA Voice, along with myself and 1,000 other members, will be hosting a responsible banking rally to address this particular issue. LA Voice has 25 congregations, Islamic congregations, Jewish congregations, as well as Christian congregations, and we're going to be echoing the pain of thousands that are unemployed, thousands that are without instantly homeless, to urge the City Council to look into this ordinance that will hold banks accountable and reward those banks that we've been working with, Broadway Federal, Pan-American Bank, who has a tradition to assisting those who are in need, extending business loans to those creating more jobs, and also reinvesting in our community. So we want to remind you of this as the City Council looks at this. Look at the full figure. There's a human being attached to these statistics. There's children attached to these statistics. There are schools attached to these statistics. And if we just allow this to go, just purely looking at the bureaucracy and these elements, we may be costing serious damage to the community in which we all have pledged to serve. Thank you.
Thank you. Before you get started, let me ask Maya come up, and Lisa Payne. Okay, Dennis.
Good afternoon. My name is Dennis Santiago. I am the Chief Executive Officer of Institutional Risk Analytics. We are a bank ratings company. We are Southern California based, been in business since 2003, and are currently under contract to the Securities and Exchange Commission to analyze banks for them on a quarterly basis. That's all 15,000 single unit banks and bank holding companies in the United States. I come before you today to support this ordinance. I believe that what is happening here is an important marker in where the economic recovery is going in this country, and that the City of Los Angeles is leading at the moment in terms of pondering ways to use local force to improve the economy for people in and around our area. I believe at the last hearing for this on the 26th, there was a question asked as to whether or not this system could be made to work efficiently, and I believe there is. What is important to understand is that the interests of banks to be looked out for must accommodate the way that they know how to report to make it as least costly to them as possible, and take advantage of the skills of the city translating bank coverage and zip codes into census tracts so that the city can make its own determination as to how banks are working in its interest. I believe this is something that can be done. It requires understanding that in implementation, once this ordinance is in place, that the people that are charged with doing so take advantage of the natural divisions of skill that exist in our community. Thank you very much.
Let me just ask, you state your company again, and what role do you play with them?
Excuse me?
State the name of your
company. The company is Institutional Risk Analytics, and I am the Chief Executive Officer, sir.
Thank you. Maya?
Good afternoon, Maya Zettler on behalf of VICA, the Valley Industry and Commerce Association. We understand that there is a great deal of frustration in our communities across Los Angeles. However, we believe that this ordinance before you today keeps a significant bureaucratic layer of compliance on top of an already existing and well-established regulatory framework. Imposing this new regulatory framework on financial institutions in our city will only complicate the legal and business environment without achieving any real meaningful reform. We feel this ordinance before you should be opposed, and hopefully we can request a continuation today, as we believe that it will create a huge amount of work for the city treasurer's office. In an environment before us when we feel that the city is facing a budget shortfall and it will result in and has been resulting in significant reductions in the workforce. Moreover, many of the problems with the draft ordinance are rooted in this attempt to require banks to abide by requirements that we feel are inconsistent with existing state and federal laws that are already regulating this industry. The proposed program is flawed as well in the fact that it does not establish clear standards for compliance across the board. We are asking for continuation before you today so that we can have additional time to work with financial institutions and city staff to study this proposal in more greater detail. Thank you.
Thank you.
My name is Lisa Payne. I'm with the Southern California Association of Nonprofit Housing. We are membership.
Could we ask Beverly to come up? Beverly Kenworthy? Okay, go ahead.
We're a membership organization of nonprofit community development corporations that build rental homes affordable to families making up to $45,000 a year and homeownership homes affordable to families making up to $75,000 a year. These homes are much needed by the Los Angeles workforce since average market rent for a two-bedroom, one-bath apartment is over $1,400 a month, which is affordable only to families making over $58,000 a year. Nearly half of LA workers, however, make under $25,000 a year, and over three-quarters of LA workers make under $50,000 a year. Since January 2008, affordable developers have been able to start new or rehab construction on over 4,000 affordable homes in over 45 developments, creating over 2,800 jobs during construction. Virtually all of the construction jobs require the payment of prevailing wages, and most are also subject to strict local hire requirements. In addition, the industry will generate over 1,000 jobs each year after these developments are occupied due to spending by the residents in the local economy. The city has invested in the development of affordable homes through its Affordable Housing Trust Fund, but the city can't do it alone. It needs private investment as well. SCAMP supports the tracking of local bank investment by this measure because it will incentivize local investment in affordable homes.
Thank you.
Beverly Kenworthy with the Los Angeles Area Chamber of Commerce. I know that the people I'm working with at VICA and at CCA have already addressed a lot of the issues that the Chamber is concerned with as well. You know, for the past year, we have been focusing on what the core services of the city should be and looking at handling and managing our budget. We think that one city should not be in this business of regulating banks, not only because we think that it's going to create a huge financial burden for the city, we think that it will create legal liability. We don't know if the city, we assume the city does not have staff on hand who are experts in the banking industry and the regulations. It's very complicated, and so we just wonder what the city's resources are, and we think that this needs further scrutiny before we take this leap into banking regulation, which is typically not done for cities for very good reasons, and we need to figure out what those are. So we really encourage, you know, some further scrutiny into this issue to find out what's legal, what's actually realistic with the city's resources before we move forward, and we urge you to consider those questions. Thank you.
Thank you very much. That's the end of our cards. Mr. Alican is here, who's the maker of the motion, if you come up this time.
Good afternoon.
Good afternoon.
I know the chair is very familiar with this issue because having served on the Jobs and Business Development Committee, he's heard at least a couple of hearings on this issue. I would beg to differ from the immediately previous speaker in that cities are beginning to do this. In fact, the City of Boston just introduced a motion. The City of New York is considering it. The City of Carson is implementing it. Dutchess County, New York, is exploring it. States are also exploring it. The states of Ohio, Massachusetts, Illinois. New Mexico their legislature voted to divest from national banks, but the governor did not go along with it, so that measure did not pass, although they did take the legislative action to do that. The city of Cleveland has been doing this since 1991, and the city of Philadelphia has been doing it since 2002. And in fact, in Philadelphia, independent studies show that Philadelphia depositories have improved the quality and quantity of home lending to Philadelphia residents, especially low-income and minority neighborhoods in Philadelphia, largely attributed to this action. The bottom line is every household that has a bank account does what I'm asking us to do as a city, and that is to determine who is the best bank that we should do work with in terms of all the services they provide. Our constituency, the people that hold the purse strings to Los Angeles are not us. They are actually the citizenry of Los Angeles, and we have to do what's in their best interest. And at the same time, stand up to the fiduciary responsibilities under the law. Every one of these organizations that I mentioned is exploring that or has already done it and are meeting their fiduciary standards under the law. But we have, what we have done over time is take each action, each transaction as a singular activity, and based on that activity only looked at the financial issue and the money interest of the city, as opposed to looking at a much more holistic view of what is in the long-term interest of the city of Los Angeles. Can banks over time, based on the large investment portfolio that we hold, be moved to make more small business loans? Can they be moved to to avoid the foreclosures that we've seen recently, and also to have better lending practice and even lower their interest rates? Those are the kinds of things that can occur if we take the step to hold them accountable by reviewing them. The federal government indeed did this. So there's a federal policy that says it is important to scrutinize banks based on their community reinvestment. One of the problems with the Federal Community Reinvestment Act is that it is federal, that it is based on a national standard. Your local banks, if they are national, so for example, the large banks, the national banks, do not have to meet a community reinvestment standard in the local area. They only have to, so Bank of America only has to worry about North Carolina, technically. There are some standards they meet, and there are things that are negotiated with different jurisdictions, but in terms of specific responsibility, this is essentially creating a community reinvestment standard at the local level, and it's based on the things that we believe are important. So the kinds of things that what this will do is specifically ask for lending data once a year, and we'll specifically be looking at residential and mortgage lending performance, not only with regard to their lending, but also what in the aftermath in a foreclosure process. Are they meeting the standards? How were they good actors? Were they modifying their loans or not modifying their loans? Are they ahead of the curve, and should they get extra points for doing a good job? Small business lending performance, community reinvestment performance, which is the philanthropic aspect to it. I think, in fact, it's interesting to me that the national banks, some of the national banks have been so vocal about this, because to me it seems that they would be more competitive because they have more to offer. So also we want to, in addition to that, the affordable loans, loans for affordable housing organizations should be credited as well. The treasurer will then put these scores together. I recognize that we have some work to do to figure out who is going to staff this and how much that would cost the city. I commit to work with the treasurer to find that money, and even if it comes out of my district temporarily, I feel that strongly about this issue, and I believe the costs are not going to be that much. So that's essentially what we're trying to do. There is a national movement to scrutinize banks in the aftermath of the foreclosure crisis. The foreclosure crisis did not only affect homeowners, it affected apartment owners and small businesses, because now the small businesses can't get financing. I don't need to tell you, because I know every one of you is encountering people in your district, just like I am, who say they have a great 20-year record with their bank. They can't get financing, even though they got scores of over 800, they can't get a loan. So this is a way for us to measure our own portfolio. We specifically have impact with regard to the general fund of $6 billion a year. And in when you look at the total package of the pensions and everything else, we have potentially $30 billion in impact. I think that would get people's attention and get them to invest in a better way in our community. You know, it's interesting. I was at the California League of Cities, and as a policy issue, and they wanted to wait to see what we did with this issue and what the National League is going to do. But some of them were very blatant in their arguments that they like it, but they don't really want to see it because they negotiate very good community reinvestment just verbally, and they negotiate it with them directly. So my retort to that is, there's no question the squeaky wheel is going to get the grease. The cities that start with these policies first are going to get the best return. There's no question in my mind. I want LA to be on the cutting edge of this movement, and I do believe it is a movement, rather than waiting for other jurisdictions, particularly for those national banks who can pick and choose which jurisdictions they're going to give more or less to. I believe this is a way for us to improve opportunities for people of Los Angeles, at the same time manage our fiduciary responsibility and get a reasonable return on our investment. But with a more holistic approach, we can calculate over time, as they did in Philadelphia on the affordable housing, that we actually will accrue more benefits, even financially, if we take a reasoned, responsible banking approach. So that's the purpose of this. And you know, it's really interesting. I'm not anti-bank. In fact, if I was anti-bank, I wouldn't be proposing this at all. I'm concerned that we have 300,000 people in Los Angeles that don't have bank accounts. I want them to bank. I want them to get engaged in the financial system. I think all the ships will rise if more people are using wise financial decisions. But if we are going to ask them to be financially literate, and when they are choosing a bank to bank with, to assess what is in their best interest. Are they looking for an interest-bearing checking account? Are they looking for a reserve account? Should they go over their credit limit? What exactly is their desire? And they should work with that, not just the interest on their checking account, if they get interest. And we should do the exact same thing. It is our responsibility to use simple, caveat emptor methods to ensure that we are getting the maximum benefit, not just the maximum dollars per transaction, but the maximum benefit over time. And that's the purpose of this motion. So with that, I would ask for your support, and I recognize, Mr. Parks, that the treasurer would need additional staff, and I'm perfectly willing to work with them on that.
Just a couple quick questions. Before you came in, a constituent got up and talked about paying their loan on time for 17 years. And then certain alleged modification strategies were employed, and now she's being asked to vacate. Would this impact her or anybody else that I met with last week, a group of people with their children who are also in the same spot who were thrown out? What impact will it have on a person right now that's either in the foreclosure mode put in by the bank or on the verge of not getting these return calls when they talk about modifications and so on and so forth? How would this impact the people?
What this would do is, for the first time, it would measure those activities. So if a bank wants to take our deposits, for example, for the first time, the treasurer will have a list of performance records of all the banks. They would identify those banks that would be in the top 20, and those, not 20 banks, but top 20%. And those banks would get priority. In other words, if this person who spoke, which we can multiply by thousands, literally, in Los Angeles, that would be measured in the assessment. So they would not get the benefit that they now get by having some of those practices and still getting our deposits. It doesn't make any sense. So this would push the banks to do a better job of modifying those loans, to work with the federal government to improve the modification program itself, and to find ways for people to get out of foreclosure as opposed to deeper into it.
So what you're saying is, because
yes.
we do banking with them, that, if they don't shape up and, do this, they wouldn't get our financial backing.
Yes.
Okay. Philadelphia, you said 2002, put something like this into effect.
Yeah.
Has their foreclosure rate in percentage to us since this downturn 2008, we've been in it for 2 years now, has it impacted the citizenry of Philadelphia in terms of people being thrown out of their homes, foreclosed? What value did it have right now in Philadelphia?
I'd have to do the research on Philadelphia specifically to know a direct answer to your question, but all I can tell you is that there isn't a city in the nation that wasn't affected by the foreclosure crisis. And Los Angeles was one of the worst in the nation, and in many categories. Mr. Parks and I bore a huge brunt of that, he being the number one in commercial and housing foreclosures, and me being number one in housing foreclosures in the region. So whatever Philadelphia did, I know it was better than L.A. I can't tell you specifically what happened.
I just want to see if it is indeed a safeguard.
Mr. Kuntz from the ACE organization has information if you want to hear
In
that.
answer to your question on Philadelphia, Philadelphia has actually had one of
Your
the...
name for the record.
Peter Coons with ACE. Philadelphia actually has one of the highest success rates currently on producing modifications where banks, what they've done is with the program that the council member described, working together with another program that is requiring banks to sit down and modify loans. There's a much greater degree of accountability, and right now the estimates are that over 60% of customers seeking modifications that live in the city of Philadelphia are getting them successfully with banks because of these programs that have been passed.
Let me mention with regard to Philadelphia that in 2002 they passed a fair lending ordinance, but they actually passed what is equivalent to a responsible banking ordinance in 1993. So they've actually been working with the banking industry for much longer in this kind of program, these kinds of programs.
Last question I have is, what kinds of monies does our city put into these banks and deal with these banks? It gives us that lever.
Well, as I said, we control $6 billion every year. We checked on December 31st of last year, and Bank of America alone had something like $180 million in deposits that day. So it's a very large amount of money, and I am not opposed to putting that money in the same banks if they meet the standards that we create. And, we're going to put the money someplace. So the question is, can we improve the standards? And frankly, I personally don't think that the national banks that work with the city of Los Angeles are really fearful of Los Angeles, because I think their track records are not that bad with regard to some of these areas. Some of the worst banks are out of the equation now. But I believe they can be more competitive. There are some that do have some problems in the foreclosure area, but I believe that they're fearful that other cities are going to be doing this, and I believe that to be true. I believe that other cities will do this because it's a prudent thing to do.
One of the things I would ask you is that from looking at the ordinance, has there been any assessment as to the volume of work, or whether these reports are already being done? Are they electronic? Are they already reporting them to other jurisdictions or things of that nature? That seems to be one of the issues of the volume and what is being requested.
Absolutely. One of the biggest complaints of the large banks is that this will increase the volume of paperwork that they have to do. And the fact of the matter is, most of the information is already incorporated into other reports that are required by the federal government or other agencies, and can be easily accessed. And there are experts who do just that. In fact, I think one of them is here, Dennis Santiago, and he could give you more detail on how that is an exaggeration, to say the least.
Yeah, Philadelphia has already had this type of ordinance for a long time, and it apparently complies with federal banking laws. Is our ordinance that different that it would be out of compliance as was suggested, or is it similar enough that we're confident that it would be in compliance?
Well, first of all, the city attorney they wouldn't write an ordinance that they believe was illegal. I mean, they would advise us as such, and they've said this is perfectly legal. Secondly, yes, they are in compliance with all federal laws and state laws regarding fiduciary responsibility, as that would be the primary concern. And that's the first thing you hear from treasurers, by the way, is, well, we got this fiduciary responsibility. But fiduciary responsibility, the word fiduciary isn't just money. It's about your total responsibility as a recipient of responsibility, or an implementer of responsibilities that have to do with financing. And so there's no reason that we would be out of compliance with any federal or state law.
And we've been hearing from pro-business interest groups that have been lobbying against this ordinance. How many of them do you think have members themselves that are small banks that would actually benefit by this ordinance?
Well, if you're talking about like the L.A. Chamber of Commerce and VICA.
Chamber of Commerce and VICA and others that we've heard from.
Yeah, the fact of the matter is that the banks are very large member dues payers to those organizations. And I don't believe I couldn't tell you specifically. It's not something I looked into, although they have said that a significant number of their members are banks and financial institutions that would be concerned about this. But frankly, I don't think, for example, the LA Chamber has a whole bunch of local banks, and well, I don't have the right. I said I think I don't know, but I think I have the right to say whatever I want to say right now. But the point is that many local banks support this. In fact, our preeminent spokesperson on this issue is with Pan American Bank, and the founder of that bank is Ramona Bambuelos, the Treasurer of the United States. They very much understand what we are going for, and they support it.
Well, maybe that's a question I should ask directly of the Chamber of Commerce representative, if we could have him come up.
I think we had a representative. Tobin, would you like to come up? Because we had a representative earlier. Right?
Come on up. State your name for the record.
First of all, let me apologize. My name is Gary Tobin. I'm president of the Los Angeles Area Chamber of Commerce. That was inappropriate, my standing up and saying that. I apologize to you.
But you got us all our attention.
Now that you have our attention, let me ask you the same question.
I've never been known to do a passionate outburst either. So.
You might have seen that once or twice over the years. Do you not have members that would also be on the other side of this issue that would benefit by the passage of this ordinance? And are you not representing them well by taking this position?
We have lots of community-based banks as well, and all of the banks who have communicated with us have indicated that the data that is being asked is quite onerous, and if they're forced to comply, obviously they will, but they also know that someone at City Hall then has to go through all of the data from all of the banks that you're talking about. And you probably know that we have hundreds of banks in Los Angeles.
And that's a fair point. How do we anticipate dealing with this with our current staff situation?
You're going to bring them up in just a minute.
Well, first of all, the number of banks that would get involved in some of the transactions that the city engages in, it's not going to be hundreds. I mean, they just don't have the capacity. Many of the small local banks, certainly, they can. Many of these banks can't even sell bonds, so that's not going to be an issue. In terms of the deposits, many of them can't even manage deposits, even in the millions of dollars. So certainly when it comes to tens and hundreds of millions of dollars, they are not at issue. We're only talking about the largest competitors here. And so in terms of managing it, what I'm working with the treasurer's office in doing is identifying additional staff. I forget the number of bodies, but it's enough that I would be willing to help cover the cost of it out of my office budget. But at the same time, it would give us a better picture for subsequent action.
So are we looking at doing this in such a way that we wouldn't make every single bank fill out all this paperwork, and we wouldn't be tracking every single bank in the city?
No, only those that want to
be applying it to the ones that have expressed interest already in doing business and contracts with the city?
Only the ones that want to do business with the city now. I mean, only the ones that want to do business with the city would have to go through this process.
Okay, so that's something we should make clear to folks in the business community.
Tell us how many banks that is right now.
Because it sounds like some people are fearful of an onerous process that actually won't apply to them.
Well, first of all, I dispute that the process is that onerous, and there are other experts that have convinced me of that. But secondly, I don't think it's going to be that many banks that are going to have to participate, and the largest banks already produce a lot of this information, almost all of it, in other reports.
So we'll just have to find a way for them to be able to compile that information from what they're already doing in the least painful and bureaucratic way possible.
And yes, and I believe that is, I think that based on the experts I've talked to, that is very achievable.
Good. Thank you.
It's Mr. Coons. Let me just ask the question. I think the question I thought Mr. Rosenthal asked earlier was if the Philadelphia had this ordinance in place since 92, 93, what was the impact on whether foreclosures were occurring? And I think you answered what they were doing to resolve them in after they've occurred. I'm wondering if you have any information as to whether the ordinance impacted the overflow or the involvement of foreclosures on the front end as opposed to how they're basically modifying the loans on the back end.
Well, I think that one point that the council member made is that a criteria of this ordinance would be how many successful permanent loan modifications are being produced with regard to the ordinance.
The question I think that was asked, if Philadelphia had the ordinance since 92, 93, was there any visible positive impact in what everyone else went through on foreclosures that they saw less of it?
Well, I don't know if one of the points of this ordinance was to prevent the foreclosure crisis from happening in the first place.
You're missing my point.
I think I understand your question. I don't have data on whether the foreclosure crisis was avoided in Philadelphia to any extent.
The concern I had is you answered the second part of it, and I thought the question was on the front end. So if you don't have the data, then that's fine.
Okay, I thought the question was relevant to modifications too, which is why I answered the way I did.
Thank you. Okay, any other questions? And then we have one other person, Mr. Peter Venegas, as a comment.
Can I take a stab at answering the question again in a broader sense? The success of the modifications in Philadelphia is in part due to the relationships that they developed with the banks as part of this whole program, and their ability to respond to it. I'm only taking the anecdotal information Mr. Coons provided that, in fact, and plus I have this this other fact that was given to me by my staff in terms of their...
I would never dispute your knowledge of Philadelphia. We found that out last week.
Okay. I'll have to catch up with you on that later. But
I think that's what I was trying to clarify, that it's anecdotal information about what's happening now. And I just wanted to clarify, the question appeared to be, with this ordinance in play well before the crisis, did we see the ordinance impact positively on the community as opposed to
Well,
would the ordinance
yeah.
help you modify the loans after they occur?
No, but the significance of the modifications is that it prevents foreclosure. So the fact that they were able to engage in modification activity means they had fewer foreclosures per...
No, I understand that anecdotal information, but I just wanted to clarify, and he didn't have the information as to what impact the ordinance that had been in place for over a decade, whether it caused to have less foreclosures than other places around the nation that didn't have such...
He can probably get you that answer specifically.
That's what I was... Mr. Venegas?
Councilman, thank you for allowing me to speak. My name is Peter Villegas with J.P. Morgan Chase, based here in Los Angeles. I want to just address some of the misconceptions or comments that were made that were not factual. One, the expert for any evaluation of banks are the regulators who oversee the banks. In this case, for some of the national banks, it's the Office of the Comptroller, the OCC. And I don't know if the council or Councilman Alarcon has reached out to the OCC to see, in fact, how banks are evaluated or scored on their performance. Banks are not their CRA performance is not determined on where they are headquartered. In fact, banks are examined, are expected to report on their CRA activities based on their assessment areas, where they take in deposits. LA City folks need to know that, rest assured, there are a lot of resources from financial institutions that are being targeted to service this city and promote products and development and programs that can service LA City. One is the Bank on LA initiative that was initiated by the LA City, and we are, as well as all other institutions, a part of this initiative to encourage the unbanked and underbanked to get into the banking system, away from check cashers, away from payday lenders, because of the cost that impacts those particular families. We also, as we are proud members of LA Chamber and VICA and Central City Association, we are also huge investors and supporters of SCAMP, LA NHS, and the many nonprofit organizations that service your districts and service the LA City area. We are arm in arm with them in trying to address the various obstacles that we have. Obviously, modifications are a huge issue affecting us, and we are working with the appropriate individuals to try to help people with the families, including Mr. Peter Coons here, who I speak with directly with members of ACE and their particular problems, if it's Chase-related. So there's a pipeline of communication. In regards to Philadelphia, I think we're open to any similar ordinance that Philadelphia may have, but I think if we'd be more than happy to provide information on all of our efforts to service LA City directly with your offices moving forward.
Thank you very much. Any other questions? Thank you very much. Mr. Alarcon, do you have anything else? We'll bring city staff up.
No, just to say that it sounds like Chase would be a great competitor in this new process because they have such great things to report. So I don't know what they should be worried about, quite frankly. This is, as I said, caveat emptor. We have a responsibility to ensure that the taxpayers' dollars are being used in a way that benefits those same taxpayers in the best way possible. And I think that gets us closer to that reality. Thank you very much.
Thank you very much. We have city staff, CAO, city attorney, treasurer, and we have CLA also. One thing I'd like to maybe start off, although this ordinance is primarily directed as to the treasurer in their efforts to basically invest money for the city, it also comments on underwriting, which is under the purview of the CAO, at least a portion of underwriting, because we have underwriting and also our proprietaries and CRA and others. So why don't we start off with the treasurer, and give us your insight, having reviewed the draft ordinance, also your understanding of the operations of Treasury as to what the impact would be, or what the concerns or positives that you see about the ordinance.
Good afternoon, Stephen Allen, Interim City Treasurer. I want to state for the record that the Office of the Treasurer is not necessarily taking any position on this issue, but I'd like to add that in addition to that, we are willing to implement whatever guidance that we get from City Council, knowing though that the state gives us fiduciary responsibility that to an extent holds us responsible for any actions that we may take with regard to the Treasury. Having said that, it is important to note that there's a reason the state is very interested in what we do in the city treasury. The state requires all city treasuries, county treasuries, or basically local government treasuries to adhere to certain regulations with regard to deposits. And they also, in addition to that, well, I'm sorry, I'm going to go back a second. One of the reasons they do that is because they believe that the state has interests in the cities or the counties or all local government success in their business when it comes to deposits. If there's a bankruptcy in any local government agency, the state believes that that would have a negative effect on them. In addition to that, I also wanted to say that in implementing this ordinance, if we're given the necessary resources, then it is something that we could potentially do. The problem is I don't know at this time what those resources would be. I have looked at briefly the Cleveland law. I've also looked at the Philadelphia one briefly. The last one I looked at was Philadelphia, and I looked at the report that they provided was about 278 pages worth of report. I didn't print the whole thing. It's pretty big. But I also want to say that in addition to that, the state also provides guidelines with regard to CRA reporting as it relates to banks and depository institutions. The state requires that we get into contracts with such institutions that will get the federal government rating of at least a satisfactory level. Having said that, we do currently in the city treasury use ratings, and all our depository institutions currently get an outstanding score from the federal government. We haven't looked into the potential or the possibility or what it would potentially cost us. I do know that in the Treasury, we do have a program that helps disadvantaged communities with regard to loans. The program itself is called the CDARS program. We set aside about $10 million of city funds in that program. It is a program that, to an extent, ensures that all city deposits with regard to the CDARS program is FDIC insured. The deposits are broken down in chunks of $250,000 each, and that is the FDIC insurance limit right now. So we do that. However, if City Council feels that we need to go beyond that and provides us the necessary resources, we are open and willing to help.
Let me ask you, you said you looked at several ordinances across the nation. Do you have any sense of what expertise it requires internally to do the evaluation that's discussed in the draft ordinance?
I want to believe that the expertise required includes some level of understanding in community lending practices of different banking institutions. Currently, we don't spend a lot of time doing that. As a matter of fact, I want to say we really don't. I do know that there are departments who are specialized in this, and last time we talked to the city attorney about it, we recommended that it would be a good idea to include the CRA, CDD, and possibly housing department, because they do have that kind of information and could be very helpful to us. I don't know if that has been added so far.
Have you done any preliminary to understand what the workload might be and what the expertise levels might be?
We haven't. We're still looking at different local government proposals in different areas, and it's an onerous process. Let me put it that way. We've looked at the requirements that the Treasury, the U.S. Treasury Department, places on banking institutions, and the instructions themselves in filling these forms are pretty large and substantial. We have a staff in the Treasury of just about 35 people, but it is important to note that those 35 people are responsible for an investment portfolio of over $7 billion and transactions in excess of $50 billion a year. It's pretty tough with 35 people, so we are going very slowly, knowing that we have other responsibilities in the Treasury, and it's going to take us a while before we can tell you exactly how much it costs.
Then, Ray, let me ask you from the CAO's perspective on underwriting and those issues. Have you looked at it as it relates to what the impact might be on the city's handling its debt?
Certainly, on a staffing level, we haven't gone through a full assessment, but given the volume of information that may or may not be available, we certainly will need additional resources to kind of go through that information, parse through it, and be able to evaluate and put together a good ranking, or I should say a good analysis of the sort of the community investment, so forth. Obviously, on our side, we do have, there are concerns sort of in the underwriting side of the house. We have a number of banking institutions that also have affiliates that basically underwrite bonds, and then we have a whole separate category of actually just underwriters. Given the size of Los Angeles and certainly the amount of credit that's needed, whether, Mikola or when we go out to the Strand and so forth, certainly we have seen that the larger institutions play a significant role in that process. For them to somehow be, I don't want to say penalized, but to sort of go through this development that's more of a local community reinvestment score could have an impact depending on your direction and counsel on the ultimate ordinance. Just sort of stepping back, I mean, really when we go out with our RFPs, this is something that, in a more generalized fashion, where we ask for much of that information. What are these folks doing at the local level? I mean, what are some of the services? What are some of their staffing, local offices, things of that sort? We do ask for some of that information because we want to know, do they have, what I'll call a footprint or some local investment and so forth. Certainly, it's not to any degree or extent to what's being proposed here, but we do feel that it is appropriate question, and it's good to have some of that information with those folks that we're doing business with.
And then also, I mentioned, I may have narrowed it down too far, but we say underwriting and dealing with banks, we also deal with them on debt, on letters of credit and things of that nature. Would that be similar issues?
That is correct. Letters of credit, and we actually were just going out recently to replace our Bank of America letter of credit, $200 million, and unfortunately we only got 2 responders to that and to that process. We have some concerns. I mean, there's already perception right now that Los Angeles is perhaps not as friendly as maybe it once was. And given sort of the headline risk, various issues, with this ordinance and some other things, many of the banks are concerned about providing the city some credit. And certainly that was reflected in this last.
Let me ask the city attorney, in looking at, and I understand that Treasurer's somewhat guided by the government code, also the charter, how does it that those particular ordinances or legislation impact their ability to address some of the recommendations that's in the ordinance? Is there a conflict? Do they have the full ability to move in that direction?
Yes, we believe the treasurer and the CAO would not be hampered in any way by any possible conflict or preemption by the state code, for example, versus the requirement of this ordinance. This is basically a disclosure ordinance, and the city in this framework is acting as a market participant, not a regulatory entity. Therefore, after all this information is disclosed and is processed by the treasurer, and the treasurer issues the community reinvestment score, which will be shared with the CAO, that score in the end will be used as one factor in their determination for awarding the contract. And that is purposefully vague. It's one factor, and it will be up to the treasurer and the CAO how to use it. If they perceive a conflict, let's say in consultation with the city attorney or the like, then certainly they will give it less weight at that point to the CRS, to the community reinvestment score. Otherwise, they may give more weight, or it could the CRS can act as a tiebreaker if all of the institutions are hold an outstanding rating in the institutions that they currently deal with.
If I heard you correctly, then you're viewing that the rating system is one of what many things to evaluate, or it's not the singular criteria?
Specifically, the ordinance says that the CRS, the community reinvestment score, is one factor to be used by the treasurer in determining the award, what institution will be successful in receiving city business. Again, city is acting as a market participant, and the same thing will be true of the CAO.
On the recent federal legislation of banking reform, are there any issues there that would impact this ordinance?
Once more, we are not aware of any specific preemption issues. However, if the banking community comes up and points them out to us, we'll be happy to evaluate at that point. I personally don't believe there is any preemption issue, because this is primarily a disclosure ordinance, and the CRS is a factor. It's a score. Yes, it's a numeric score that the treasurer will come up with, but how it's used ultimately is going to be up to the treasurer and the CAO.
Let me ask you this: when it gets specific, such as it's a factor, but if it gets specific and begins to direct a higher volume of city business, if you're in a certain criteria, is that a issue that would be of concern? And it seems like it goes beyond one of the criteria. It looks now as though it is directing an action as opposed to merely using it as an evaluation.
It is allowing the treasurer to use that factor to increase the amount of deposits in an institution that is more successful with regard to community reinvestment. It doesn't require the treasurer to do so, but again, treasurer still has certain specific duties under, let's say, under government code. There is a specific code that requires that the treasurer, first of all, to safeguard the principal. That is the highest level of care that's being provided for public funds, then liquidity, and finally the interest rate. All of these take precedence over the CRS.
But in that statement, you said that the issue that even though it's directing that higher volume of city business goes if you're in the upper 20% and less goes in the lower 20%, you're saying that's a guide, it's not mandatory?
It is a guide. Just to quote the section, which is one of the new sections, 20.98.1, first paragraph at the end: further, with respect to banking institutions which already conduct city banking transactions, the treasurer may, upon making such evaluation and ranking, take the following measures. And those measures are to increase banking institutions or decrease, to increase the level of deposits or conversely decrease it. And frankly, there is a catch-all subsection C, which allows quite a bit of discretion to the treasurer to take any other actions as he or she deems necessary at that point, to discharge the treasurer's fiduciary duties towards public funds. So it's this, while the CRS itself, the number is not a discretionary number, how it's used, that ultimately will have to be a matter for the treasurer to develop guidelines to properly use it.
Okay. And then what is your interpretation on the area that talks about doing business with banks that have maybe been previously found guilty or been involved with civil or criminal charges? Is that nationwide? Is that local banks? How do you perceive that?
Any bank that has been found guilty, let's say, of engaging in discriminatory practices or maybe even criminal activity, again, the treasurer still has the option of awarding banking business to that, or the CAO have the options of awarding banking business to that particular institution. The caveat is they will have to report that action to the city council.
Okay. So it's not, it doesn't prohibit.
It's not prohibitive, no.
Yeah, I do. First, how many banks are we talking about in the city that we do business with?
Council member, we do business with various banks in various categories. In the office of the treasurer, we do have 3 depository institutions. That is Bank of America, Wells Fargo, and Wachovia. For custodial, no, I'm sorry, for trustee and for trustee and for purchasing card, we have a U.S. bank.
Yeah, I just want to know, because if we do an ordinance, I just want to know how many banks.
Okay. We have over 27 institutions that we deal with in the Treasury's office. A majority of those come under the investment brokerage that we do in New York.
Okay, so we get 27 out of the 200 or so banks in the city we do business with that could be impacted by
Yeah, some of them may not necessarily be in the city.
Okay.
Yeah.
How many of those 27 are in the city?
I will tell you that of the depository banks, all the depository banks are in the city. That's Wachovia, Wells Fargo, U.S. Bank, and Wells Fargo, Wachovia.
Okay.
Yeah.
This disclosure ordinance, which is what the city attorney is saying, LA Voice says that this ordinance would help hold banks accountable to us as LA residents. Information asked by the financial institutions in the ordinance will allow the city to judge which institutions are helping rather than harming LA communities and the city staff. How would they do that with this ordinance?
It will provide another factor, basically the community reinvestment score on the scale of 0 to 100 that the treasurer will be able to use as part of the whole evaluation of the banks that actually bid for city business.
Specifically, the lady that had 17 years paying on time, who's now threatened to be thrown out, would it have any impact on this foreclosure that's going on?
Certainly, one of the information requested from the banks would be modifications of distressed loans, the number of foreclosed properties owned by the financial institution, and at that point, that will be taken into account when the treasurer comes up with the CRS, the community reinvestment score, and how it's used and what impact will have on the bank. I think it would be speculative for me to address that issue.
Well, that's really the core of where I'm coming from, because I don't know if you can answer, anybody up here can answer it. When we took our hard tax dollars, be it President Bush or Obama or both, and threw these monies at the banks went around and gave themselves bonuses and lived happily ever after, but the foreclosures dramatically have increased over the last couple of years. do we have any appreciation of our tax dollars and the banking system and its impact, or obviously no impact on this foreclosure business or loan modification? I mean, I just don't know enough, to be candid with you, to see if this helps us. I mean, I'm outraged with the banks, don't get me wrong. I don't appreciate the fact that we threw $1 trillion at them and they are not lending money. It's our money that we gave them, tax money. Two, people are going into foreclosure. And if the stories are true that they've been paying and everything else, and now they're getting thrown out into the street, because there are a lot of people impacted. I just want to know enough about the system to understand it enough to see if this has any value at all. Do we know? Anybody?
Well, if I may, I think
anything about the federal action that they took, what impact it had, and how it was regulated or not regulated, or did we just throw money down a rat hole, or what?
That I won't comment on, but sort of to answer your question as far as whether it will impact that lady. It will not directly impact that lady. The hope through this ordinance is that through the evaluation process, then the banks would then start putting more dollars into the community, whether through loan modification, et cetera, that would then basically help those people. I think it would be pretty hard for us to say at this point, yeah, this is going to directly help that person. Most of the foreclosure, all that stuff, modifications, all that stuff is coming from the federal government. And actually, quite frankly, we're not even sure where some of the regulations may go. We still have the Dodd bill still going. We have the Basel III. There's still some changes that are probably in the works. We don't know what those are at this point and how they will affect our banking institutions.
If I understand this correctly, from my point of view, it would impact her, but only very indirectly. In fact, her problem would impact our process more, because we would be looking at how many people are mistreated in the way that she is being mistreated, and that's what we would take into account. So it wouldn't stop the banks from harming her, but if they did that on a regular basis, it could eventually stop them from doing business with the city of Los Angeles. So it's sort of an indirect leverage question. If a bank is taking all these questionable actions, at some point we take that into account and presumably stop doing business with them. And just one thing I wanted to clarify. So we're not talking about completely disqualifying any banks on this basis. We're only talking about factoring it into whatever process we use to decide whom we do business with.
The treasurer certainly has the ability to disqualify a bank under certain circumstances. But again, that is discretionary, it's not mandatory. And ultimately, how the treasurer chooses to use the CRS is up to him.
I assume if we do completely disqualify a bank and they then take corrective action, I assume there's some process for us to reinstate them and again start to consider them in the process.
The ordinance contains a due process clause. Basically, they will, if they are disqualified, if they are rejected, not disqualified, the institution has the option of having a hearing before either the treasurer or the CAO, depending who did the rejecting, and basically they have the right to contest it.
Well, that's not what I'm asking, because I'm not asking if they can contest it if they've done a bad job and try to talk us into still doing business with them. The question is, after the fact, after we've disqualified them or rejected them on a contract, do we have a process where they can get in our good graces again by changing their actions and changing how they approach foreclosures?
Well, a banking institution would, the CRS is fixed in time. It's a one-time event based on past practices by the bank, and they put together the numbers, and a number is created by the treasurer according to his own to guidelines that he will develop pursuant to the ordinance, and then the bank, presumably that was rejected, can start the process anew, and that at that point a new score would be generated based on the information, updated information, and presumably if the information is more favorable to the banks, to the bank, a higher CRS would be generated.
Great, thank you.
Okay. Now, just some more questions about modifications. I've had several constituents come to me who are responsible people I've known a long time, that all of a sudden find themselves caught in this situation because they keep changing the bank person they deal with, they keep sending material later than earlier, and the frustrations were palatable from both of these constituents of mine. But the role I want to know that we have in this with this ordinance, how do we tell who's telling us the truth, who's right on the mark, who isn't, who did something this way or that way? Are we going to be the arbitrators of a bank foreclosure when we don't know anything about that kind of stuff? And I don't know, he said, she said. You know, I can see ourselves put into a role like we were the bankers second-guessing them or first-guessing them or Monday morning quarterbacking. I'm just not too sure how you get your criteria list that puts somebody on a bad list. I just don't know how we are able to do that kind of thing.
One of the factors that, one of the pieces of information required of banks during the application process would be the number of modifications of distress loans. And that is a number generated by the banks themselves, which is my understanding that it's already required, I believe, probably by the federal government, maybe the state as well. And that number being generated by the bank, presumably it's accurate, and at that point, that will be one factor that goes into the generation of the community reinvestment score. So it's not, under the current ordinance, the city doesn't act as an arbiter between bank customer and the bank itself, only deals with the bank.
So then this could put them on notice, since they do business with the city, to be very clear as to how they're putting people in foreclosures or people in modifications. It could have that positive impact, I mean, from a legal standpoint?
Well, presumably a high number of foreclosures will catch the eye of the treasurer, and that will negatively impact the CRS. Conversely, a low number of foreclosures and maybe a high number of loan modifications would have the opposite effect and would improve the CRS, the community reinvestment score.
Treasurer, do you want to respond to that?
I'm sorry, could you repeat? I was busy looking at something else, I'm sorry.
The ordinance currently requires banks to provide quite a number of quite a bit of information about their lending practices, charitable activities, and so on within the city of Los Angeles, such as home purchase loans, refinancing of home purchase loans, home improvement loans, home equity loans, and so on and so forth, including foreclosures and loan modifications and the like. And all of these numbers will, under this ordinance, will be used by the treasurer to come up with a community reinvestment score for that particular institution. How? Well, those would be guidelines that the treasurer will have to develop later on, and presumably, if the numbers, the negative numbers, number of negative events in the bank's practice is high, that will negatively impact the community reinvestment score. And conversely, if the bank has a very low number of foreclosures and maybe a high number of loan modifications and so on and so forth, presumably that will impact the community reinvestment score upwards.
It's a difficult question, but it's going to allow me to say something that I wanted to say earlier and didn't get a chance to say. First I want to say that the city charter provides a way to provide preference to local businesses, and local businesses in the charter is LA County and the state of California. The proposed ordinance has preference to businesses or loans originated in the city of LA. In my mind, and I discussed it with the city attorney already, in my mind that constitutes a conflict. And it's something that I'm going to have to think about before I start working on this, because it's giving me some headache. It is one of the criteria, and the fact that in my mind I see a conflict between the charter and the proposed ordinance, where we say 20% of loans and branches in the city of LA, while the charter says preference or local preference is LA County and the state of California. So in my mind, that gives me an immediate roadblock to implementing this until I find a way to clean it up.
Ray, did you want to add anything to that?
I think this is just a couple more things. I think what's important, I mean, there's a lot of information being requested. I mean, certainly on the residential, we've talked about the home loans, home improvement loans, equity, all that stuff, and all the information that'll be gathered. The hope is that through this reporting mechanism that the banks will then say, oh, look, I'm going to have to provide this information. I'm going to be on record. It'll be publicly available. So you know what? I'm going to try to do what I can to start cleaning things up, taking care of your loans and things of that sort. It remains to see how quickly we can sort of get that going, and how quickly that, well, I guess I want to say that attitude shift, not to say that there's a bad attitude, but that whole perception, and through this reporting, what it forces with the large institution. So.
Do you want to add anything?
Thank you, Mr. Rosenthal. Just briefly, this proposal was originally introduced back in February 2009. It's been undergoing development in the Jobs Committee, and back in December when we reported on this, Roy Morales, I'm sorry, with the CLA's office. When we reported on this, we had 11 financial institutions that the city treasurer was working directly with, and it's my understanding we have about 18 or so underwriting institutions. So that's the universe of reporting at the time that we would need to look at the information that comes in. As you can tell from the testimony, it'll be difficult to estimate the workload that will take for bringing that information into the city and analyze that information. So we would like that opportunity, so we can then estimate the number of staff and whether it's contractual services or in-house or whatever. We'd like that information or that time so we can at least guesstimate what kind of paperwork will come in, if it's 275 pages per institution, if it's quite a bit more or quite a bit less, and then report to you, at least to give you our best estimate of that. When we reported on this proposal back in December, we had recommended against the creation of a local Community Reinvestment Act scoring system. Instead, we had proposed that a targeted mechanism be created, a targeted scoring system, and this proposal is consistent with that. In other words, the proposal is focusing on the two components that were the keys in the motion, which is foreclosures and local community investment. Those are the actions that are going to be measured by this score. So we'd like that time to at least take a look at it to see what the impact would be. I think the city attorney has testified that this is consistent with state law.
Sure. How much time would you need?
We'd actually work closely with the CAO's office, maybe 2 weeks.
They may need to wait until we give them all those directions.
Yeah, that's right, which Mr. Parks will do in a second. But I'd also like you to do in your homework phase is take a hard look at Philadelphia, because if that's a track record that has this modification, I'd like to see what impact it's had on foreclosures and loan modifications, because that's what's bringing us here to the room today, is that reality. And if we can show that Philadelphia was wise, and we can learn from Philadelphia instead of reinventing the wheel, and tying that into, I'm sure, Mr. Parks' questions of due diligence to do our homework for a report back. Thank you.
Well, I'm going to vote no on this no matter what you do. I can't imagine we're 4,000 employees less than we had 2 years ago, while we've closed our libraries, our parks, our daycare centers, park fire engines. We're going to expand city services beyond our core function. We can't even manage our own core functions now. And no matter what you do, it's going to cost money to do this. No matter what you do, you're going to have to hire people to do this. I can't imagine us going out and creating new programs at a time like this. It's just not now. So I'm going to vote no matter what.
Let me, anybody got anything else? Okay, let me just say on this issue, we're going to hold this in committee, but there's a number of things I think we need responding to. First of all, I'd like to make sure that we ask CLA CAO to work with treasurer, city attorney, and other city departments. We'd also ask them to reach out to those organizations that spoke today and get their insights and input. And I would want to make sure also there's a letter that we receive from the, I think, is it California Banking? Help me on this, Monique, is it?
The California Banking Association?
Association, if we can include that as part of the council file. But some of the questions I think that needs to be addressed in writing and documented so that there's a clarity. One, in the issue of governance, the state government code, the city charter, also as one of the speakers spoke about the federal comptroller, that those sources of governance be evaluated as it relates to this particular ordinance, that okay, and that we also ensure that the the new federal banking reform legislation that just came out is also considered as it relates to their governance and changes as it relates to banking. Also, we'd like to make sure that there's a distinction made amongst the banking institutions used by the treasurer and the underwriting and other kinds of debt services we receive from CAO as relates to the management of the city's debt. Also, we need clarification that if this is imposed, is it also would be imposed on CRA, proprietary departments, and other like agencies that's been mentioned of the pension funds and all of those issues as it relates to their fiduciary responsibility versus mandates or these suggestions as it relates to what we're asking them to do. But also,
do you really want to, I mean, why spend some time on the pensions when it's very clear in the charter you cannot direct the pensions on how they invest their money?
Okay.
We can only request.
I'm just relating it. Somebody brought it up, and I thought they could just close that door and give us the guidance that we've been given before, but just so there's no loose ends as the report comes through. Okay. But also, we'd ask that the city treasurer, that we certainly give us input as to the revised ordinance and how it may impact on their authority and responsibility in awarding these contracts. Also, that we mentioned earlier about the debt group in the CAO as it relates to their issuance of debt. Let's see, we certainly need the CAO, CLA, treasurer, and other city departments to look at the staffing, not only the number of staff, the cost of staff, but the expertise of staff as relates to the evaluation. We also would need some input from banking institutions that would advise us on the type of material that we're asking for. Is it electronic? Is it have to be tailor-made reports? Is it material that's already being presented to other governing bodies? And also how that material could be best converted to city language as we deal with issues such as zip codes and council districts as opposed to maybe banking regions. So that would be important to assess the type of information and how it could be best used. We'd also, I think, need to ensure that in requested information that we reconcile information that is received versus what we're requesting, so that we're not getting box loads of material that is unusable, so that we very definitive as to what the requests are. There's some mention earlier about governance, and I think a couple of speakers spoke about the governance over the FDIC requirements, and that we ensure that those regulatory entities are certainly involved. Also, the issue of scores, those scoring mechanisms, mandatory, are they voluntary, are they recommendations? How are those scoring mechanisms to be used? I think that covers most of the points, but I think that those are the things that are going to be needed. And now that we've given some clarity as to some of the issues, we can ask the COCLA, what do you think in time in response back?
Summer study?
Summer study.
Yeah, I'm good with that.
Summer's passed.
Which summer?
You know what, let me sit down with my colleagues and see what's involved. Do you have a number of questions? I think we're going to have a lot of back and forth conversation with the bank.
Let's ask you to
report back.
Let's ask you just to give us a report next week on timing. Not substance, but just timing for next week, and then you give us a better idea when this volume of information could be forthcoming.
Fair enough.
All right? So on item 11, we'll keep it in committee. We'll ask for a timing report on next Monday, and then we will then set a timeline as to when this material, substantive material, can be back to committee. Any other questions? So we'll move that in that with that direction, and we have no other cards, no other items, and so we're adjourned. Thank you.